Hey guys, welcome to this webinar. My name is Oishi Friday. I'm a forex trader from Delta State, Nigeria. I've been trading forex market over 3 years now. I'd love to ask you a question. Do you want to be generating over $500, $1,000 monthly on forex market without you knowing the full knowledge of forex trading? You want to be making at least minimum of 600,000 monthly or weekly or daily like me. I made over 600,000 naira daily. Like I made over 600,000 naira daily. Like making a profit like $865. So probably we saying it's a demo account. It's a demo account. You can see the withdraw there. You can see the withdraw for your look at one of my traders, Jonah. He did over 8,000 naira from a deposit of $800. Look at some of my traders who is making a hell lot of money on forex. Do you know you can be making at least $20 to $50 daily? What, for example, now what can $20 do for you if probably you're making at least $20 daily? So let's do some calculation. If you're making $20 daily as your daily target, that means 20 times 23. Because as a foreign, as a currency trader, you only trade for 23 days in a month. The remaining 8 days, Saturday and Sunday. Because in a month we have over 31 days in a month. So the remaining months in a month, so Monday to Sunday, Saturday, we don't trade as a currency trader, so we don't trade. It's only holidays. So if probably you're making at least $20 daily, then times 23 trading days, you need over $460 as your monthly income. Okay. If you are from Nigeria, you should have know the salary wages in your countries, which is over 30K. Imagine making $460 monthly. That is $460 times 750. In my broadcast rate per dollar is 750. Imagine you're making 750. You're making $460 monthly. That is over 345,000 naira. If you're making 345,000 naira monthly, you know how much you'll be adding into your life or your family. At least let's be realistic. Imagine you are doing at least 150 or 200 depending on you. Okay. Look at some of my traders who is doing it. Look at it. He said all thanks to you have hit my daily target of $20 daily. So at this point I want to rest. I will hit again tomorrow. So first, let's know what is forex trading. The full meaning is foreign exchange market, which is usually known as forex, or they can abbreviate it as FS. Is the largest financial market in the world. It has over trading volume of over $6 trillion. The largest financial market in the whole world. Forex trading is the process of speculating on a currency prices to potentially make a profit. Currencies are traded in pairs, so by exchanging one currency from another, a trader is speculating on whether one currency will rise or in a value against the other. So let's break it down. If your brother came back from US or London, then and dash you and give you like $100. During this time, he dash you the money. Then the currency price of dollar rate in your country is $1 is equals to $1 per dollar is 750. Okay, and you times it with the $100 your brother gave to you. You see that your brother is giving you over 75,000 naira. And during this time, you already know that okay, since dollar is 750, I don't want to cash it out yet. I want to hold it to next day. I want to hold it to next day. I want to hold it till next week. I want $1 per one. I want $1 to go to 800. before I will cash it out, before I will go to bank to exchange it for me. And so probably you waited for it and waited for the next week, and dollar got to 800 per naira, 800 per dollar. Then you decided to cash it out. Then you times it the current price, which is 800 naira now per $1. Then times $100 they give you. Then you are making over 80,000 naira profit. So your profit now for holding it to that particular day, that particular time, you are making over 5,000 dollar. Because when your brother gave you the money, it was around when your brother gave you the money was 75,000 naira. So when you went to cash it out, you did over 80,000 naira. So your profit now is 5,000 naira. So let's take another example. If the same dollar your brother gave to you was around 75K on $100, and you still went to bank to exchanges, the current price there now is 700 naira. So let's do some calculation. So that is that $1, then $100 times 700. Then you see that it's over at 70,000 naira currently. So you lose during that time you holded the money again, you lose 5,000 naira. So because when your brother gave you the money, it was around 75,000 naira, and when you went to bank to cash it out, it was around 70,000 naira. So you lose 5,000 naira. So it's for you to be able to speculate where the price is going against each other. So with this process you did going to bank to do it, you have already did forex. You have already exchanged your currency, the exchange of foreign currency to another currency. Okay, you have already did forex. So how can a beginner trade in forex? These are the trading step-by-step guide you need. You have to have a trading account. You open a trading account. Start researching to find a forex pair you want to trade with. Based on your research, decide if you want to buy or sell. Follow your strategy. Place your forex trade. Then close your trade and let it reflect either profit or loss. 6 ways to become a professional forex trader. You should keep on learning, trading gold, managing your risk, choosing a reputable forex broker. This is also important. Monitoring your trade, making use of a demo account for practice. Keep learning. The forex market is one of the most active financial markets in the world, seeing a daily trading volume over 6 trillion. Like I said before, is the largest market in the world that has over 6 trillion trading volume. To actively take part in a way that you won't see you lose large sum of money, you requires a proper understanding of forex. You need a proper understanding of the complexity that comes with forex market. You need to understand it. You need to understand how the market move, how the market how the market move, the charts, the candlesticks. You need to understand everything for you not to lose a large sum of money. So there are several ways to do this. The key being continual learning, regardless of how skilled you are trading forex, staying educated is crucial. It's very important, very mandatory. You should have to stay educated. This means making use of any educational resources available to you, be this video, articles, webinar, ebook, etc. Keep informed of the different tools for trading and analyzing risk. Research different forex trading strategies and optimize your own, make researches, know the trading, analyze the market, know what is working for you and know what is not working for you. What is not working for you, leave it and stick with what is working for you. Now, trading goals, irrespective of your expertise as a professional forex trader, having a specific goals is an important part of forex trading. Goals orient trading decisions. They provide a sense of direction and something to work towards. They also form the basis of a professional trading strategies, enabling a trader to better gauge performance, risk, and profitability from month to month. You should be able to have a trading goal. How much are you going to make per day? How much are you willing to make per day? How much are you willing to lose per day? For example, I have my trading goals. Like in a week, I say I want to lose. If a week I lose up to $10,000, I'm not trading that week. If eventually I lose it in a day or in 3 days before the week, I will say I'm not trading it that day again. I'm not trading that week again to the next week. So I will also go back and back test what happened. Why did I lose so much money in the market? And I also have a target. How much I want to make this week. How much I want to make daily and what I want to make daily. Like one of my traders who says who has a daily target of $20 daily. Anytime he hit up to $20, no matter the setup I set to the person, no matter the setups he see in my group, no matter the accurate the setup is, he won't trade again because he already hit his daily target. You should be able to set your daily targets as a beginner forex trader or as a professional forex traders or as a struggle forex traders. Another one is risk management. You should be able to learn how to risk what you can afford to lose. Yes, it is well known that trading forex requires a specific tolerance of risk. This is due to the highly volatile nature. Yes, the forex market is so volatile compared to imagine trading gold. You're not using stop loss or then you know that your fucking money is gonna boom. You see your green just hit up to red. So volatile nature of the forex market and the potential to lose capital if the risk is not properly managed. Professional traders typically have a risk management strategies in a place relatively to their trading goals or style of trading. This strategy will seek to quantify potential risks so that the losses become measurable, so that you can be able to reduce the losses minimize your losses, so and maximize your profit. You understand? So there's identify the tools. Let's identify the tools we use to minimize risks. Like we have stop loss, which is known as SL. We have TP, which is known as T. We have take profit, which is known as TP. SL means stop loss, and TP means take a profit. Trailing stop means break even. Okay. Stop loss is where you say I want if the current price got to this place, I want my trade to close. And take profit say when this market goes to this place, I want to take off my profits. Okay. Why trailing stop means if you enter a trade and you give you up to 20 pips or 40 pips, I only advise my students or my traders to just set your break even, which is known as trailing stop. You set your break even. That means moving your entry. You enter at this point, move your entry to your SL. That means break even. Beyond the scope of definitive strategy, professional forex traders understand the benefit of exercising cautions and control to make sensible trading decisions. You should be able to exercise patience, caution, allow the market to flow to you. Don't force the market. Monitoring your trades. To become more profitable, more professional forex trader, monitor your trade over a set period to gain methodological data. Use this data to understand how your trades have performed while you're doing your decision. You should be able to monitor your trades. You see how the markets move. Monitor your trade. Even if you take 3 hours, 4 hours per day for your chart for your trading career. Take it. Watch the market. How the market move. Watch the market. Backtest it from month to month. See what happens in the market. What happens in the past. Also, what happens in the present. Understand how this market move. Monitor your trades. Know what works for you and what is not working for you. Any mistake you are doing, don't try to confirm it. What mistake am I doing? All this and adjust to it your trading strategy and know what is working for you. And make use of a demo account. This is also important for you to do. As a demo account provides professional forex traders as a way to continue test their trading strategies. And demo account is only meant for you to trade, to strengthen your hand, to strengthen your at least to test your strategies, what is working for you. But a real traders and a demo account is not the same. The physiology is not the same. Imagine you are trading your own money, then and a demo account. We won't say the physiology someone that is trading a demo account and a real account is the same. Because someone that is trading a demo account is not his money. He can either use any loss size he wants. Why a real account will just maintain its risk. You understand? So choosing a reputable forex broker. then at least you should know what is a broker. A broker is an individual or a firm that acts as an intermediary between an investors and a secret, a securities exchange, because a exchange only accepts orders from individuals or firms who are members of that exchange. Individuals, traders, and investors need the services of exchange members. Okay, broker is a partner. A broker is like a bank that gives you access. Like let me say a bank that gives you access to buy airtime, to do transfer to your loved one, to withdraw your funds. So brokers also give you access to trade in forex market, because without broker you can't trade. If someone that have over $10,000 accounts can trade forex. Imagine if there is no broker, you can't trade it. You don't have that funds to trade. You don't have that funds to trade. You don't have $1 million to trade forex. Imagine someone that comes with $150 will start trading. So a broker will give you the leverage to trade. So people that move the market, this is one of the most important things we should also take note of. Major players in the market tend to be the financial institutes like commercial banks, central banks, money managers, and hedge funds. Global corporations use forex market to hedge currency risk from foreign transaction. Imagine you Let me just break it down for you to understand. These four people are just people that move the market. These people that to that says this is where the price is going. Not me and you that has just has $1 million accounts. I will move this market. No, it's this people that is moving this market that says this way the price is going. This way, these people are putting so much amount of money, like putting over $1 billion into forex to move the price to their particular point they want it to move. So I don't want you to trade against them. So what are the most traded forex pairs in the world? We have Euro USD. These are the pairs we trade. Euro USD. We have other pairs again. So we have Euro USD. We have USD JP. We have JP USD. So these are the pairs we trade. So we have four types of traders. We have scraping, we have day trading, we have position trading, we have swing trading. So scraping forex scraping is a popularly trading strategy that is focused on smaller market moves. So these people are just entering into the market and scrape some of the profit and scrape profits and go up for the week, or at least they can just go and scrape, collect a little profit from the market, anyone, then just close their trade. We have day trading. This is my own. I trade daily. This is daily trading, refers to the process of trading currencies in one day. Like sitting off tomorrow, we just wake up, wait for another session to start trading for a page you want to trade with and trade with. At the end, at least 3 to 5 hours. Then depending on you, any the time depending on the time you see your nice setups, and depending on the time you see the setup that works for you. We have position trading. Position trading is long-term strategies. People that hold for a long term, people that hold like 3 weeks, they still want to trade. We have swing trading. Unlike day traders who hold position for less than one day, swing traders typically hold position for several days, although sometimes as long as few weeks, because position ahead over a period of time to capture some tense market move. They want to catch up the profit, they want to catch up the big move. First, they have to analyze it from a higher time frame to understand where the market is going. So once we dive into the chart, I will show you most of the things you need to know. Do not need to sit constantly monitoring the charts and their trades throughout the day. Swing traders don't even whether to monitor their trade, or I'll give you an example like the pavilions. You only come out and analyze the market. Okay, this is where the market is going. Like you can only like come out to the chart and say and just watch it once in a while and say, wow, like in a week now you just come out and analyze it and place this trade. Then wait for another week to see how the trade is going and still doing other his business. So I would like to ask you this question: who and who moved the market? I'll give you 3 seconds to answer this question. 1, 2, 3. I know probably you will have the answer in your mind, or if you have already know the answer, that is good for you. So financial institutions like commercial banks and central banks, money managers and hedge funds, these are people that move the market. And these are people that you don't want to trade against. Because imagine you want to trade against, imagine you want to fight a governor. For let me take an example in Nigeria. You want to fight a governor, he doesn't have that right. He has the capacity to take you into prison. But if even it's just a call, you're already in prison. You understand? You don't have the capacity. You don't have the funds to trade against these people. You imagine you have $1 million to a trading account. You want to move the market. No, you don't have that funds to move the market. It's only these people that move the market, these central banks, the money managers, the hedge funds. These are people that move the market. You imagine you having $1 million account, then you want to challenge someone that can put per trade, that can put per trade over $1 billion. So imagine you're challenging a person. Imagine the central bank say they want to buy, then you decide you want to sell with 1 million account, with $1 million account, so you want to sell. Then they are pumping over $1 billion. So you see that your $1 million is just a piece of, they will just use it to claim that the market will just use it to balance. So since you already know who moved the market, you shouldn't trade against them. Then how do you trade like banks? So let's dive into the chart. Let me show you some of the things, some of the secret most traders are not willing to show you. So here is Euro USD. These are some of the pairs I trade. I trade gold, I trade Euro USDs. So what's the first thing I first do is to come out to daily weekly time frame to see what happens in the past. You can see the market was downtrend before going before moving to uptrend. So you can still see the market is uptrend currently, but it's trying to go down to the downtrend. I'm a smart money traders. So this is the last other block that caused this positive move down here. So market still came back to test it. So we have also have why some of the reason why the market still came back to test this place. There is imbalance here, imbalance IPA, indicated price action, the full meaning of IPA. So there is indicated from year to year. Let me draw it more closer so that you understand it more better. So from year to year, they still indicated to tell you that here is the last institutional candle that makes this that caused this market to move down to this place before taking up this higher high. So we're expecting this market to come to this last institution before moving higher high. So let's go to first analyzing from a weekly time frame and see what the market is doing. Here is the macro. We have macro, we have micro. Here is the macro. Here is the macro. Then the macro is bullish, then when the macro is bullish or the micro is bearish, don't trade against it. If the macro is bearish, then the macro is bearish, the micro is bullish, don't enter yet. Wait for the micro to be bullish. If the macro is bullish, then micro is bearish, don't trade, don't look for a setup. Wait for the micro to be bullish first. Wait for the micro to be bullish. So you can see that this macro now is bullish. It's uptrend. So go to like daily time frame. Make sure you analyze from daily time frame. Make sure you analyze from daily time frame. This is the last other block that caused this positive move. You see, market came back to repeat, keep on testing each other block that causes. So to tell you that this market is still coming down to here. This market is still coming down to this place. Because why? Because there is mitigated price action is still mitigated because from here, market will still come back to refill in here. Wait, let me draw it proper. Market will still come back to here to mitigate to this place. To this place. Market is still coming back here. Market is still coming back here. So here is an, for example, I want to jump into this trade now. I'll probably be looking for a buy. I'm looking for a short buy here. Yes, I'm looking for a short buy here. Short buy here. If I want to enter into this trade, I'm looking for a short buy here. My stop loss will be here. I'm just giving an example. I don't trade like all this high time frame because my SL will be so much. So I will refine this to a lower time frame. I'll refine it up to 30 minutes time frame or 15 minutes time frame. So imagine trading, not trade with high time frame because the SL is too much, like up to 150 pips stop loss. It doesn't make sense. So yeah, I would like you to enter this trade to then target this and look for another high or look for another imbalance to target the profit because why I shouldn't focus I shouldn't focus on this trade on high because they still an imbalance. This market I still come in to mitigate this imbalance here. This market doesn't move like this. You see, if you need trade, you see that it's imbalance. Know that this market is coming down to mitigate this imbalance from here to here. This market is coming down to this place. It's coming down to this place to mitigate this imbalance. That is the week of another one to another. This candle, the week of this candle, this market is coming back to mitigate this candle. You can see this market is coming down to mitigate this candle. So probably I'm looking for a long shot from here. I'm looking for a long shot from here. Looking for a long shot from here. The reason why I'm entering on this place because I don't know where the market is currently going to move up high. Probably the market might not come down to this place. So we have to enter. We have to set our another limit here. We have to set another buy limit here. Eventually, the market steps instead before moving high, or still comes back here. Imagine we got here. It gives us just give us like up to 50 pips. Then it stops out. Then stops us out. Then we come back to this place. Then enter this trade from here. Look for another entry from here. Look for another entry from here. Look for another entry to here. You see the profits there. If, for example, you got 1% negative here. You got all this massive move to this down to this place. And you see you have recovered a lot of money you lost from here. If eventually you lost money from here. So you should be able to identify. For example, I got stop out from here. I will still come back and say, why did I go stop out? Why did I go stop out? I will still look for the reason why I got stop out. Should be able to understand the candlestick, how the market move. And secondly, if you can see this liquidity, markets will always do this. Market will always do this. And if you see any liquidity resting, the market will always come back to take off that liquidity before moving high. Market is coming back to, these are the reasons. Market is coming back to take off this liquidity. This liquidity resting here is over millions of dollars here. Because liquidity is money. The market will always come back to take it off. Some of the trades I plotted out is not she plotted out. So you just tap me in and start moving to my direction. There's another block here that makes me to put my entry here. There's another block here. So I'm expecting this market to come down to this place before this market start going down. If you imagine this imagine this now is holding liquidity here, and this market is going to take off this liquidity and it's creating higher low, lower low here, and it's creating another liquidity resting here. So expect this is the clean counter trend. This is the clean institution candle. This is the cleanest. As you can see, this is the cleanest, and we still have an imbalance. This market has to mitigate. There is no imbalance here. There's no imbalance here that this market has to mitigate. There's no imbalance here. The week, the week of this one to the week of this one and the week of this one is attached. The week of this one and the week of this one, they are most closer. So from this week of this last and the week of this is not close. So I expected to enter this trade from here. Expect to enter this trade from here. To enter this trade from here. Just draw my long position. Just give it a little. Just leave it 15 pips. Then cash this higher high. My target number 19 pips, 99 pips. So you can see our risk ratio is a little bit. While I'm entering at this, we are already giving us a break of structure. This is the higher high, the proper breaks of structure. So the last candlestick that causes this positive move, this is the most cleanest. This is the most cleanest. So let's go for another. It's not good. Some of the goods I took. Some of the goods I took that gave me over 1,000 pips, if I'm not mistaken, or 500 pips. Let me go down to. You can see I'm not entering any buy. Any buy entry now should be at least in good now. I can be able to determine that yes, there's imbalance from here to here. That this market have to mitigate all this imbalance before moving high, before start selling again. So before start buying again to upwards. So the market have to mitigate all these places. So I have to look for any entrant for. I'm only looking for a sell. I'm only looking for a sell until this price goes to this place. Once it's got to this place, then I'll start looking for a buy position. I'll start looking for a buy position. So let me show you some of the trade I took. That gave me positive move. I took this price from here. Yeah, I took this trade. This trade. I got a lot of profit from here, and I got stop loss from here. Imagine, look at the pips that got stop loss because my SA was too tiny. I was too stingy. So because I don't like 30 pips SL. At least my maximum SL is if the currency pair is not volatile like good. At least my SL, my minimum SL count should be like around 15 pips. I don't do more than that. 15 pips essay. I don't risk more than that. So I got stopped at how much was my pips? It was 1 point something pips. Look at it, 1.9 pips. If I would have like putting it at 9 points, like 5 pips, I would have purchased this most if we move up. So I got stopped at from here. I made this profit from here, then I got stopped at from here. Then I waited for the market to consolidate. I didn't enter again. I was looking for another player. I wasn't interested. So I saw another entry here. Yes, I saw another entry here. So there's institutional candle that caused this positive move. You see, there's an imbalance that caused this massive move here. This market still came back to mitigate it. You see, this market still came back to mitigate this see from here to here. You see this here to here. The institution candle here. The institution candle here. Look at what I told my traders. The reason why I said 15 pips here. I told them we have two institutional order blocks that causes this positive move. So I don't know the one the market is going to first test. So this market first tested this one and come back. Wait, let me reduce this setting so that people will see it properly. This visibility the text should be around, let me leave it 14 so I can see it very well. Look at it. Look at this. The market first tested here. First tested here and give us like up to like 50 pips. 50 pips then before reversing. Before reversing, boom. And go to that other block. This news that pushes it. I can remember it's news that pushes it to this other block. So we haven't stopped us because I said 15 pips. So even came back to hit our TP here. Look at this. We hold this trade to this point. Then I still draw my counter trend that I'm entering here. I'm entering here. I didn't enter this trade here. I didn't enter this trade here. I'm not yet in this trade. So we just cut off this positive move here. So if I know maybe most of you are saying yes, I didn't enter this trade, I didn't enter this trade, something like that. But let me just dive into this my Telegram group and show you guys. Oof. Look at my entry. This one is Euro USD. This one my Euro USD. You should see they are the shorts. See how we took the shots. Boom. So this is how we trade it. The fucking Giants playing here. Look at this trade. When I analyze this trade, look at when I analyze this Euro USD. Let me look for it. Yeah, look at how I analyze this Euro USD. I see this market is coming down to this other block. You see this market keep on repeating this. You still come back to this other block. I got 1% negative here. Not 1% because I stopped at. I got a profit from here. I got the profit from here. I got the profit from here. Then I see I will still come back to this other block because I know since this market did this, it's still coming back to refill this imbalance here. So I was expecting this market to come back to here. You know, it tested this level here. It tested it and give us just a few pips. Then just give us like up to 13 pips, then come back and stop us at. And after seeing it, I said I went to look for the higher time frame. I see this market is still coming down. So I decided to look for an institution candle that causes this positive move here down here. So I just draw my counter trade from here and I place my buy limit. So let's see what happens. So this was one of the negative 1% negative. I told you guys I got 1% negative from here. From that one, this is negative 1% negative from my account I got. So look at it, look at it, look at it, look at it here, look at it, look at the entry here. Look at it, we got stopped, we got to hit our TP. We hit our TP. Yeah, this was the one I told you guys I captured this move. This was my first entry, this was my second entry. Then this was the one I stopped at. This was the one that negative I showed you earlier, 1% negative I got stopped at. I still carry this positive move. You see our profit is higher than our loss. If you're able to understand how this market move, your profit is going to be higher than your loss. So let me show you that gold. Look at this. This is the gold. Let me show you. Look at it here. Look at when I analyze the markets. Look at it here. Look at it. We have this institution block. It's clean. The market, there is an indication from here to here. It's also clean. I told my traders we have two institution other blocks that causes this positive move. So this is our entry. So that is the reason why you see this SL too big. So I don't know the one the market is going to test. So I have to make my SL big. So you can see I'm not lying. Look at the date. Let me find the date. Look at it. Main 9. Look at it. Main 9. It was on main 9 I dropped this. Look at what I told my students. Probably you'll be asking why this 15 pips is here. We have two institutional order block that cost this possible, floating an IPA, mitigated price actualize the meaning. So I decided to increase the SA to 15 pips because I don't know the other blocks the market will respect. Please raise only 1% of your account. And I always advise my students raise only 1% of your account. The maximum you can raise 2% of your account. So let's see what happens. What happens with that profit impact. We always say, look at how we hit that one. Say we might hit 15 pips, $15. Then we got over to something. See the profit. You see the profit. See it here. So we are not fucking trading demos accounts. So let's see what happens. Let's see what happens on good. Let's see what happens on good. Look at it here. Look at it here. Look at this possible. Look at this few. Look at this pips over 700 pips. Look at it here. Look at it here. Once you go to the chat and show you guys, so I'm not fucking playing. I'm not fucking lying here with you guys. Look at it. Look at it here. Look at it here. Look at it here. The reason why I'll give you some of the tips why I choose this institutional candle here, this last institutional, and I know that this market is still going to respect this. It's going to respect this institutional candle. There are a lot of liquidity resting above here. So this market have to take on this liquidity. No, liquidity is money. Market will keep on holding liquidity. Any liquidity you see here around holding, for example, let me look at a lot of liquidity resting here, resting here, resting here. Lot of liquidity. So anywhere you see liquidity, don't enter the trade. Just wait for the market to take off the liquidity first before entering the trade. So I hope you guys learned something today for this webinar. So let's dive into one. Trading. So I've shown you guys how to trade like banks. So at least so most probably people will be asking me to be their mentor. Do you want me to be your mentor? Or you want to trade my signal? Or do you want to trade with me? And if I will be your mentee, mentor, or to trade with me, will you able to pay me? Well, I don't know how strong is your pocket. I won't charge you guys if you grab the offer I already created the offer. So trust me, I'll make the offer so easy for you guys to just jump in. So for my signals alone, I charge over $200 monthly for it. Take a look at what some of my traders is. Dolani is paying me over $200 monthly. You can see it here. You can see it here. You can see when he's sending Bitcoin. You can see it here. You can see it here. You can see it here. You should know that if my signal is not accurate as I preach, then you won't be paying me $200 monthly. So do you want to be making like $20 to $1,000 monthly or weekly, like all of my mentee? Like meet some of my traders. Meet some of my traders. He deposited $800. He deposited $800. Then I done over profit of $3,000. The drop profit is over. Look at some of my traders who deposit $500. I'm done over $2,000. So let's see what they see. You can see my logo here. You can see my logo here, but I've closed my GPG with 30 pips. I haven't waited to hit the TP. So it has been a pleasant moment trading with you, but I was able to hit my profit target and I have withdrawn 2K from my 3K profits. That was I'm really grateful. Look at some of my trader Lura. I have grown my 500 account to 2,000 plus. Now withdraw my profit. Thanks for your signals, and I really appreciate you. Because I always advise them to withdraw some of their profits. So look at some of my traders who's making money here. Look at it here. You can see still my logo here. If you think I'm lying, I see some of my traders is making a lot of money here. This one I started today from $49, then now 90 something, $93. Look at some of my traders. Are you paying me the 200 for monthly payments for my signal? Well, the answer is yes or no. You are either paying me or you're not paying me. So you should probably be asking yourself, are you paying me the $200 for my monthly signal? The answer is yes or no, because I don't know how your pocket is. You might decide not to take up the offer. So then I decide, see, I like your trading style. I want to trade with you. Then decide to pay me $200 monthly. So to still be cool, because I'm giving you guys 2 months free. I'll give you guys 2 months free. In the morning, some people is paying $200 monthly to enter into my VIP. So, and you are getting it free, or you are getting it free of charge. Imagine saving up to $400. So let me write this offer. Like I said earlier, I'll make this offer so easier for you to get in to my VIP group. So the offer is made for others who is willing to start trading with my broker. Finish. You are willing to start trading with my broker and fund your account. Then you're good to go to join my VIP Signal group. So your trading capital determines the offer you getting in. If you are starting with a minimum, you are starting with a minimum deposit of 150 to 49 as a minimum deposit as your trading capital, then you're only getting access to my signal. You're only getting access to my signal group that worth over $200 monthly. Imagine you are saving, you are getting it for two months free. Getting it for 2 months free. That is, you're saving up $400. You are seeing the who is paying for it. If you are starting with 500 to 1K as a minimum deposit, note it's your trading capital, it's not my own account. It's you're not sending me any money. I don't have access to your account. You can withdraw your funds at any time, any convert of your time. You're only funding your own account. You're not giving me the money. So you're getting a free forex course that will teach you what over $250. Yes, what over $250. A live training weekly. We host a live training weekly. We analyze the market together. We see what happens, how the market moves. Weekly, like one hour or 2 hours. Then you have to for the week is weekly. So you also get my signal worth over 200. You're getting access to weekly training worth over $500. Then my free signal. So hit up the link. So okay, wait, I will show you my broker. So SNET is my broker. So if you are willing to switch to my broker and start trading with my broker, then we are good to go. We are good to go. And if you're already an SNET account, you also test me with this. You can also test me this. Then if you also test me with it, then I'll tell you what to do to get access to my free signal group for free without you paying any them. Of you will find it difficult to verify an account on SNS, but I have a video that will guide you on how to do it. How because most of you have been doing it wrong, submitting the wrong details. So you just text me this word VA, then I will know that it's verification you're talking about. So I already have a training video that will tell you what to do and how to place your trade, how to do your stop loss, your asset, what to do. So why I'll be the one analyzing the market, being 24 hours, they've been 6 to 3 hours being on the charts, seeing what the market is moving. I enter the trade, you enter the trade. I still hit my TP, then you hit your TP. I hit my SL, you still hit your SL. We are in together with this. So thanks for staying with me at the end of this webinar. Click the below link to get started.